Hello everyone and welcome to another Singerreise video podcast. My name is Jonathan Sylvia and I'm your host. Thanks for joining us. This is yet another video in a series I'm calling 7 Tips for Singer Taxes. Thus far we've covered some of the basics and our first 4 tips. Tip number 1, keep a log of all your income. Tip number 2, put all your self-employment income into a separate checking account. Tip number 3, only use your business checking account for business. And tip number 4, save for and pay estimated taxes. That leads us to tip number 5, track your mileage. This and the next tip are 2 of the heavy hitters when it comes to tracking business expenses. Mileage in particular often winds up topping the list as my single biggest business expense. Like the previous 4 tips, this one has more to do with your everyday life as a singer than it does with doing your taxes at tax time. It's more about developing good bookkeeping habits that you can maintain throughout the year. Tracking your mileage is fundamentally pretty easy. All it requires is that whenever you drive to a gig, you jot down the date, how many miles you drove, and the location that you drove to. You can create a chart and put it on a clipboard and keep that in your car with you. Or nowadays there's actually a ton of smartphone apps where all you have to do is start the app and it will use GPS to chart your miles for you. My preferred way to do it is through a traditional little notebook and pen. So here's my routine. Before I leave for a gig, I check the trip odometer on my car's dashboard and I make sure that it is set to 0. Then I go to my gig and I drive back. As soon as I park my car, I pull out my little notebook and I jot down the mileage on the trip odometer into my little notebook. Then I turn off the engine and go into the house. That's the routine. Here, keeping a routine is the critical part. It means that you can keep the habit going. And the easier that you make that routine, the more likely it is that you'll continue doing it. For me, it's far faster and easier to just simply jot a few things down in a notebook than it is to fiddle around with a smartphone app. You have to unlock the phone and then navigate to the app and then tap a few things to get it going. Having it on paper also means that if I have to switch my phone or switch the phone's operating system, or if the maker of the smartphone app goes out of business, well, then I don't lose all my data. It's all right here. Then, when tax time comes, all you need to do is total up all of the mileage for that year. This is the point where I usually take my little notebook and I convert it into another spreadsheet. I couldn't get through another episode without talking about another spreadsheet after all. Then, you multiply that total mileage by whatever rate applies for that year. It's usually around 50 cents per mile. The total mileage times that rate is your business expense that you can claim on your taxes. The business expense lowers your gross income to a net income, and a lower income means less taxes. By the way, because I know that it costs about 50 cents per mile to drive to a gig, I can use that to judge whether or not to accept a gig in the first place. If you take the total miles that you drive to and from a gig and divide by 2, that instantly gives you an idea of how expensive that gig is going to be. Indulge me in just a bit of math. A $50 gig that is 50 miles away will require 100 miles to go round trip. Divide that 100 miles by 2 at 50 cents per mile, and then you have $50 of expenses. $50 minus $50 means no profit. And mileage is only the first expense that we're looking at. That's before we take into account all of your years of training and experience, all of the time it required to prepare for the gig, the travel time to and from it, the rehearsal time, the performance time, and the monetary expenses of buying a score, buying an outfit, and, oh yes, that 15 to 20% that we have to take off the top for taxes. So don't take that gig. Not only are you earning no money, you're actually in the hole by a pretty wide margin. There's a few other things here, though, that that we should pay attention to. First, the intention of that 50 cents per mile figure is that it covers the overall cost of operating a vehicle for your business. The mistake is thinking that it only covers gasoline. Instead, the rate also includes wear and tear on your vehicle, so things like oil changes, brakes, tires, batteries, and even the cost of car insurance. So when you're doing your estimates for how much a gig is going to cost you, it's better to use that 50 cents per mile figure than it is to try and figure out how many gallons of gasoline it's going to require. If you really want to, you do have the option to track your actual expenses instead of your mileage. To do that, you would total up all of the expenses for your vehicle, including both gas and maintenance, and then apply a percentage to that total based on how often you use your vehicle for business. This almost never works in your favor though, and it's definitely more complicated. Let's also talk about that business checking account from tips number 2 and 3. Well, sorry. Unless you're going to use your vehicle 100% of the time for business, and you're going to track your actual vehicle expenses instead of your mileage, in this case, don't use your business debit card at the pump. Instead, treat this as a personal household transportation budget issue. We will get the business expense and the tax write-off, but that will happen at tax time instead of before. This one is also important. You can only track mileage for work that you do as an independent contractor through self-employment. You can't write down any mileage that you do as an employee, even if it's singing work like a church job or the opera chorus. Finally, you do actually have to write it all down, and that means every single trip. You can't just make up some large round number. When tax time comes, you are asked specifically if you have a detailed journal of all of the mileage. If you ever get audited and you don't have that journal, you're in for a lot of additional taxes and some pretty nasty penalties. The IRS is fully aware that this particular business expense can be exploited, so really don't lie or fudge the numbers on this one. And that concludes tip number 5. For tip number 6, we'll cover another major business expense. If you want to find out more about the life of a working opera singer, check out our website, Singerreise.com. There you'll find articles and resources all about singing and about being a singer. You can also follow us at facebook.com/Singerreise, like the Facebook page, and like, share, and comment on all of the posts. Or twitter.com/Singerreise. You can use the @Singerreise handle there. You are presently watching the Singerreise YouTube channel. Make sure to subscribe to that before you leave. And, of course, there's patreon.com/Singerreise. This is how I earn money making these Singerreise videos, and how I am able to continue producing more and more of them. So if you like what you saw in this video or in any of these Singerreise videos, please consider becoming a patron of Singerreise. If you need some more reasons to do that, there are 99 reasons of them. Go ahead and check out the YouTube channel and watch some of those. Anyway, I hope you'll join me for the next video, and thanks for watching.